Hello, and welcome to Luther James Insurance. I am your host, the best podcast host in the universe, Steve Cully. I'd like to thank our sponsors at Procyon Partners. They are one of the top 50 fastest growing companies in the nation. They specialize in employee benefits, wealth management, and retirement planning. President Sean Rabinowitz, proud supporter of our podcast network. Green Street Trust International, owned and operated by Rennell Jump. They specialize in tax plans for businesses large and small. They will save you money or get you a big fat return. To schedule your free strategic tax planning session today, go to www.greenstreettrust.com. Pete Finch and the Finch Law Firm is located in Bridgeport, Connecticut. If you've suffered any type of personal injury, slip and fall, car accident, your mother-in-law ran you over with her car, your wife got angry and decided to stab you, the Finch Firm is for you. Pete has won legal battles all across the state of Connecticut, and he will go to war to get every dollar you deserve in compensation. All you have to remember, in a pinch, call Finch or go to his website, thefinchfirm.com. Dynamic Human Performance is owned and operated by Andre Dixon, UConn legendary running back. He trains boys and girls of all ages, all sports. He has a boot camp program 7 days a week at 6 a.m. You want to get in shape, you train with Andre. He also has an athletic development program where he trains boys and girls from the bottom to the ground and ground up to help them reach their full potential, be the best they can possibly be. Andre has sent boys and girls to college on scholarship for all different types of sports. To work with the best, he has a 5,000 square foot state-of-the-art facility in Hartford. Go to www.dynamichumanperformance.com. Now for the man of the hour himself, Mr. James Whitfield of Luther James Insurance. Great to see you, James. Happy Thanksgiving. Happy Thanksgiving. And we are going to get rolling right here. So something came up. We had a question about, is it final life insurance?
Or final expense?
Final expense. Can you talk a little bit about that and when people should get it and the cost of it and what it provides for?
So, final expense insurance, I think that everybody should have something, in case you meet your ultimate demise.
Okay.
Now you have other insurances and things like that covers death as well. But I don't want people to just get the premise that, insurance is only about if you pass away, they're going to pay your loved ones a premium and then call it a day. There's other policies, but this is a policy for almost any and everybody. It's especially a good policy for those who are older, so like from their 40s up into their 70s. If they don't have anything to either leave their family or something to pay their funeral expenses, that's what final expense insurance is really for. So it's
okay.
Yeah. It's really for funeral insurance. You can leave money towards your loved ones with it as well, but there are bigger policies that you can do that with. I always tell people, even if you have, let's say, a whole life policy and it's just building cash value in it, I wouldn't use that for my funeral expenses, because like, what if you had a $300,000 death benefit ready to cash out, and you give it to the funeral director? The funeral director will give you the grandest funeral you've ever seen in your life. So you don't want to give somebody too much money. Because your average funeral is anywhere between $5 and $15,000 on average. So
right.
why give somebody a $300,000 or $500,000 policy and say, hey, I want to bury them? You don't want to do that.
Okay, I got you just on that.
Yeah.
So when do people typically get that? At what age?
Well, again, it's like,
is it something that
you have a lot of people who are in their 40s and they don't have any kind of insurance. And in some cases, well, in most cases, those policies are based on your health. So it's also priced on your age and health. So the healthier you are, the cheaper it is, for one. But two, there's other things you can do insurance-wise to really, get you bang for your buck. But if this is all you're interested in, something to cover your funeral and leave a little bit of money to your loved ones, this is the best policy to do that with.
Okay, but is there, like, I mean, there's no real perfect time to get it, but
nope.
What would you say, like, the best age would be around there to get it?
Well, if you don't have any other coverage,
but you should have other coverage before
you should have other coverages. Yeah, you should have other coverages. But if like you're an older person and you don't have any type of insurance and you're under 75, anytime is a good time. Anywhere between 40 and 75 years old, because that's what most of the companies are insuring.
Okay, I got you.
Yeah.
So 45 and 75, but
Yeah.
as you said, it should be additional insurance.
It should be additional. Yeah.
It should be additional.
It should be, honestly, your last resort insurance-wise, but other people have other policies and they try to round it all up, and I got a term policy that's $500,000. That should cover my house or my loved ones in a funeral. I go against doing that only because, you kind of taken away from your loved ones when you leave, and you want to leave them money. So, if you got like 5 kids and you left them like $300,000, you want them all to get an equal share, not what's left after what you get buried by.
Okay, that makes sense. Sense. And we were talking about, term life insurance and whole life insurance. And whole life insurance is a policy that, as far as you said, will allow you to accumulate a good amount of cash value.
Correct.
Over time, correct? And that's what you said you can use for future expenses like college tuition, or you can use for income
or a house,
retire, right? And you said it can be like your bank.
Yep. If it's structured properly, yes.
Okay, so people ask how does it work to like pay into it? Like, so if you're getting a weekly paycheck, would there be a direct deposit that would go into your whole life insurance account?
You can kind of structure it that way.
You can. Oh,
you can. Yeah. I personally, depending on how much coverage you're looking for, if you're going to do it with a paycheck, I suggest try to do it all in like one payment for a month, each month, if you're going to do a monthly.
Okay.
I really go against the monthly because I'm afraid of people not finishing what they started.
That's what you said before. That's what you said before. No, but the other thing people asked is, realistically, you still should have a bank account. Obviously, you can use your life insurance policy as an account. You can put money into it, but it's just like having a second account more than anything, right?
So, like, if you're putting away, like, I always tell people, if you have it, I would start anywhere between $10,000 and $20,000 for the year, and
Okay.
because now if you're committed to doing something like that, because I'd rather people have more skin in the game than 150, $200 a month. That's not doing anything. But if you're putting away, and it's actually beneficial that you do it that way. If you like, I'm working on a case now where this person, he's 26 years old, and he had $100,000. So what I did was I split the $100,000 to 2 years. I just did 50,000 one year, then 50,000 next year. So now you built cash value in that policy after the second year, that you can borrow another 50,000 out of that policy, and in a couple of days put it back into your policy, which now is going to triple the cash value. So you'll have 150,000 from the cash value that you built up, because these policies are collecting it's collecting interest. It's collecting it's that tip of my tongue. It's Friday, bro. it's collecting interest where the following year you're going to see more money. So I structured it where I did $150,000 from the cash value of the policy for 3 years, another 3 years, and then after that, because we're talking right now, like 5 or 6 years. At 26, he'll be like 31, 32, somewhere around there. He'll have a little bit of cash value at that point, like real cash value, but he's using this policy for to show that he has a net worth. So long story short, after we do $250,000 from the cash policy, the cash built money in the policy, we're going to do that for like the next 10 or 15 years. So
right.
At I think he'll be like at 45, 50, he'll have something like 1.7 million. But if he leaves it into his 60s, by the time he's 65, he's going to have like 22 million bucks in that policy. And it keeps going.
God, wow!
It keeps going. Yeah, it keeps going. It keeps going, because after 20 years, you're not funding the policy; it's funding itself.
Oh, okay, that makes sense.
Yeah.
So it starts funding itself after that.
After the 20 years.
Okay. One of the other questions we got, because I know you work with a lot of different insurance companies. And I know you mentioned having some experience with New York Life.
Mm-hmm.
Can you explain, because some people had asked about term life insurance, that it is exclusive for AARP members?
I never heard that.
Okay.
Maybe AARP might be partnered with an insurance company.
What is AARP?
It's the old folks group.
Okay. So it's
I got
something
an AARP card. Yeah.
It's something you get when you're like over 55.
Yeah, it's like a little discount kind of thing. There's supposed to be benefits to it. I have it, and I haven't. I think I got like 5% off of movie tickets.
So it would be more of an additional life insurance that you would add on.
I'm not a big fan of term. Not
no, that's what you said. No.
Yeah. I just think you're throwing money down the toilet with term.
But can you get different types of AARP insurance?
It's ARP is not an insurance company.
It's okay. It's strictly okay.
Like they're a vendor.
It's what you are. Okay.
Correct.
All right. So anyone who offers like an AARP insurance policy, especially if it's term life insurance, that's something you would not recommend.
No. Unless like with term, you can do it. You can use it for mortgage protection, because you're not using it as insurance for yourself, because That's only good for a certain amount of years. And then when it's over, that term is done, you have to renew. And you're going to renew at the current age that you are, which is going to be a more expensive policy going forward, and it's going to be shorter. Because 9 out of 10 people will outlive those policies.
Okay. And so for people who are basically applying for life insurance, they have to go through, their medical history.
Yep.
And whether they give accurate information or not,
we'll find out.
That's what I was going to say. Is the agent able to go through and verify medical records? They can collect all health information from any of your doctors.
So I would have to get a authorization to do that. But what I do is when I talk to the clients,
you have to get a HIPAA for that, something like that.
Yeah. So when I talk to the clients, I just pretty much interview them. I kind of underwrite them myself, but they're going to go through a real underwriting when their application is submitted. So I've had issues where, and I think I told you this story before. I had a client who wanted insurance for herself and for her daughter, and I said, listen, do you have any health issues? And she said, no, I'm totally fine. I said to her, I'm gonna find out. And just to be honest, so
you did like the old police. Like,
yeah,
listen,
I'm gonna
call it in. I'm gonna find out.
Yeah. So be honest. So she said there was nothing wrong with her. I took her to a couple of places. I ended up taking her to 6 different carriers on her word. And it just so happens that one of the carriers contacted me in an email and said this is why she was turned down. And she was turned down because she had bipolar medication.
Oh, that's right. You said she was bipolar. Okay.
Yep. So I told her, I'm going to find out. Now, a person like her would be good for final expense insurance, but it's not going to be grandiose where you're going to get $100,000. Like the most you can get with final expense is like $25,000.
Okay, I got you. That's okay. So that makes sense. So, and the other questions that are asked, basically now, because people wanted to know if this can be checked. They want to know your finances, and you talked about the importance of that too. You don't want to take someone on, who's making $20,000. You would rather take on someone with a higher income.
Yeah.
So if they
want
tell
to pay
you,
for their policy,
I'm making $1 million. Do you look at their tax returns? Is there anything that you require?
I don't look at the tax returns, but what I do ask for, I'll ask
a payment stub or something,
a bank statement, just to verify.
Right.
Because you can finagle a W-2,
Yeah, you can finagle just about anything.
Yeah.
Just on a PowerPoint, because that's what people were asking. So if they come in and they say, "Oh, I'm making $2 million a year," obviously you're going to check that, and that makes a big difference. If someone's making $2 million a year and they're up for a whole life insurance policy, you'll obviously have them put down some money, and then they'll have a regular monthly premium, correct?
Well, yes and no. So it depends on how I do the policy. Now, that first policy,
how you structure
I was
it.
talking about that is going to turn 25 million or 22 million and a half.
Yeah.
That person has a trust worth 50 million bucks. So I asked to see his paperwork.
Okay.
Because I was going to do with him something a little more different, where if you're over 2 million bucks, you can get a loan and finance your retirement, but you have to have an income of at least 250.
Okay, 250,000 a year to get the loan.
Correct, because it has to, the bank has to show that you're able to maintain it.
Okay. And once you get that, or once you know that they have the kind of money, so that affects the structure of the policy. There's
Yep.
several different ways that you can structure it.
Correct.
So how did you end up structuring this?
Well, what I did was, instead of him doing the bank loan, because I said you're not going to be able to touch anything in your policy for 10 years if you do a loan. So if you fund it yourself, you have a better chance if you needed like 20 grand, 30 grand, or whatever.
Whenever, yeah.
You're better off doing it yourself. It saves you a lot of fees and a lot of time. So he did that. I said, give me 100 grand. I'm gonna. You're not giving the money to me personally, but you.
No, of course.
But I said, yeah, let's do 100 grand, and I'm gonna split it to 50,000 and 50,000, and then we're gonna build up cash value, and then really build this thing properly.
And then it would be a monthly payment.
No payments. He's doing
no payments at all. Oh, that
he's
would
doing
be
it every year. Yeah, he's doing it every year. So he's making payments twice, and then after we're putting in a loan to the company, a request for a loan. We're gonna borrow that money. They're gonna send you a check, and then you're gonna sign it, redeposit it back to your policy.
Okay.
And that's how you collect the compounded interest.
Okay.
And that was the word I was looking for when I was thinking earlier.
Compounded interest. Okay. So now, if you were to structure a policy for someone who is making like between $50,000 and $80,000, it's typically not the client that you would want or the client you would work with.
I would work with them if they're committed.
If you can trust them to make their payments and everything, if they have, secure income, if they're not a health risk, anything like that, right?
Yep. And I tell people, if you treat your insurance like a bill, it's going to treat you back like a bill.
You have to treat it like an investment.
Correct.
Right. Okay. And that would be more of where you're paying monthly. You would set up a monthly premium payment.
Depending on how I build it.
Yeah.
I can do a monthly payment, but like,
you don't like to do that.
I don't, because
okay.
I'd rather, like, even if somebody wants to do something small, and let's say they can do $5,000 or $10,000 a year. I'd rather them give it to me in a year, a year's premium, so that I can really
that does more.
Build it out.
Okay.
Yeah, it's easy to work that way, and
then
it's easy.
A monthly payment.
Yeah.
Okay.
I tell people, don't treat it like a bill. It's going to treat you back like a bill because you're not committed.
So the other question was about people's jobs. How much impact does an occupation have? I know obviously with the income, but the type of jobs that you have.
Well, it's really not the occupation that determines your insurability.
Right.
It's your hobbies.
So, hobbies. Yeah. Okay.
So you can be a doctor, right?
Right.
You can be a doctor by day, and you want to go parasailing or scuba diving, while you're on vacation. That's considered extreme. So,
and that's something you'll ask.
Yeah.
If you're going parasailing, scuba diving, bungee jumping.
Well, they ask. They ask. Those are one of the questions in the questionnaire. They ask.
But I mean, people can obviously lie about that.
Yeah, I don't know if you go scuba diving.
Yeah, you're not going to know. Mm-hmm. But though, if they tell you that, it obviously makes a huge difference.
Makes a huge difference.
Right. So, yeah, because lifestyle questions, what do you do in your free time? What are your hobbies? If you're skydiving, if you're piloting a plane, if you're ice climbing, if you're riding a motorcycle, I heard makes a big difference.
If you're a licensed pilot and you're licensed for a certain amount of years, that's not a risk.
Oh, it's not. Okay. But the other stuff, like, because someone asked about riding, if you say you ride a motorcycle instead of driving a car, or does the type of car you drive, will that impact anything?
Well, I think motorcycle riders, whether they're doing extreme or safe, they're higher risk because you're driving on two wheels. A crack in the ground or a rock in the ground determines your life and death, depending on how fast you're driving.
No, it really does. Being on two
know,
wheels and being
yeah,
reckless like that.
yeah,
That's crazy how that works out.
you'd be surprised.
And then, so if someone were to have filed for bankruptcy in the past,
Mm-hmm.
can they still get some sort of policy? Like how does that work? Because that was another.
It depends on
What chapter or
what chapter, and how long ago.
okay.
So if you were on bankruptcy like 7 years ago, and you try to get insured now, I don't think that's going to be an issue. If you're on bankruptcy now and try to get a policy, well, like an IUL or something, like, I don't think you can get it.
Okay. But obviously the main things, your medical history, your occupational history,
Yeah.
your driving record from the DMV, your even your prescription drug records.
Yes.
All that stuff goes into
Yep.
your underwriting for the policy.
Correct.
Okay. And when you're going in, what are the biggest, most important documentation that you need to have? Obviously, you need an ID.
Yeah. Yeah.
Do you need like a social security card? Do you need, if you have
I mean, yes and no. Like, if I don't think it's that in depth.
Okay.
But it wouldn't hurt to bring it.
Okay. And the other thing was about credit history. Does that come into effect? Is that something you ask about?
I don't. The system does, because the system will go through, once you put in your social security and your date of birth, the insurance company has databases all over the place that they check.
Okay. So they will basically find out.
Yeah.
I got you. Okay.
Yeah, that's what I said. We're going to find out whether you tell us or not.
Yeah, you're going to find out one way or another. You were talking about some of the different health plans that you use. There's also health insurance that you work with.
Yeah.
Can you talk a little bit about that instead of the Affordable Care Act? What other health plans are there for insurance?
Well, I was telling you the other day, I had something that kind of fell in my lap.
Right.
It's not health insurance, but it's a health plan. And I'm trying to remember who was the I'm gonna look up the carrier real quick. Give me 1 second. What's that? So it's 20 to 40% cheaper than ACA.
Really?
Yeah.
It's cheaper.
It's cheaper. It's 20. Okay. It's 20 to 40% cheaper than what you would pay for the for ACA. And I'm trying to remember what and I'm going through my phone looking for it now. Let's see. That's not it. So it's a Cigna PPO.
And okay, so and that's a health insurance.
Yes.
That's cheaper.
Yeah.
And it's something that you would recommend. Now, because you had mentioned that there's certain policies, certain people that aren't worth putting the time and money into because you're not going to get as much out of it. Correct. Is this something that is more worth your time, more worth it for the person as well because it's cheaper?
I think if you're a person who's trying to get insured for your health, It's for anybody. You can be self-employed. I can do groups. So like if there's a company that doesn't have a health plan for their employees, I can do this as a group. I can do as group insurance. And the Cigna network is one of the best networks there is for healthcare.
And what some people don't have confusion about, people, I mean, like you, like Krystal, like even Rob, you're life insurance agents, but you don't work for a specific company, right?
Correct. We're independent.
Okay. So that's different than someone who works for like Fidelity or for New York Life or something like that.
Yeah.
Right.
Yeah. Because they can only offer what that company has.
So that's the advantage of being independent. You can go to
anywhere,
whatever you want.
Yep.
And whatever policy fits best. And you've worked with all the companies. So you have contacts everywhere.
Correct.
So that's advantage.
That is, because one thing I hate to be is captive, meaning I can only sell what that company has. And even if it's not great for the person, I have to now, in good conscience, if I can't help them, I have to refer them to somebody else.
And you've been in those situations because you're not someone who is going to put someone in a policy or try to make a sale for the sake of making a sale. You want to do what's best for the person, regardless.
Yep. I'm losing money now with not signing up anybody for Medicare or ACA this year.
Right. Well, until it comes through, you can't go to it. But you still make money off it when they figure it out, when you know what you're going to get from it. You can sign people up for it and it'll still end up be worth it for you.
Yeah.
Okay. Have you worked with Globe Life before?
They asked me to join, and I said I'm not a joiner.
No, I can see that. So
because
they obviously wanted you.
Yeah, they wanted me to just work for them. I says I can't do that.
Right, because that limits you. Now, if you were to work for like a Globe or New York Life, is it pretty much the same where they would pay you a base salary and then you would get commission on all your sales?
I don't think they pay base salaries.
It's all commission.
It's all
commission based. Okay.
I could be wrong, but I think when you get higher up, you get a draw.
Okay. So is that how most life insurance companies work? Like
captive. Most captive. So it's like
captive.
Yeah, most captive. Like you have to build up your worth for them to really
pay
shell out money. Yeah. They'll give you benefits. But it's all going to come out of your commissions.
They're going to give you health insurance and everything like that, but it comes out of everything you make. So
you have to sell a certain amount of insurance a month.
It's a typical sales job. You got to sell. I mean, there's no base salary. You have to sell, and what you sell is what you make. Yep. And then after a period, right? Okay. So people who want to get into the insurance game, if they are going to college, what would you say educationally is the best major for them? Is it something like marketing? Is it business? Like, what would you say?
So I would, like, if I'm going to college and I have a sales job, I'm working the sales job more than I'm going to college, if I know what I'm doing. But if you're going to college to take courses, I would say do business management and do marketing, because you're going to market yourself.
Right.
And you still have to run your business like a business, because other than that, how is it going to run? It's not going to run itself.
Exactly. So you have to understand everything about it, paying taxes, everything that goes into managing a business.
Yeah.
And that's the key. And that's when you have really started this. I think it was 3 years ago.
Yeah,
you got
almost four. Almost four.
okay. So you're going into 4, and because you had been in other industries, you had worked with cable, you have worked with fashion,
Yeah.
and then you got into insurance. Did you work for an insurance company before deciding to go off on your own, or did
Yeah.
you okay? So you passed the test by studying the test, which I tell everyone is the great thing ever. So you passed the test by studying for the test, and then you worked for a company, and you experienced it, and you learned the business, and then you realized, okay, if I go off on my own and be an independent carrier, I have the best chance of making the most money.
Yep.
Okay.
Because I can sell things that the other company can't.
The other companies are bound by what their company offers.
Correct.
Right. All right. So that's the biggest thing. And for you, if it were possible to take somebody else on to work with you, they would work with you, and you would really teach them the game, teach them how to do it, and then it would be them doing the same thing. They'd be pounding the pavement. They'd be on LinkedIn. They'd be giving referrals, and that's how they would work for you. And that's eventually how you would like to build your business. You'd like to have several agents working with you. Okay. So, I mean, that's kind of, I mentioned Robert Belcourt because he's a Yukon guy, and he does something similar. Is that kind of what he does as well? It's an independent thing where he has the agents that work with him. And okay, because when he started Cornerstone Financial, but I mean, you also have experience in the financial service industry. You know financial planning. You can help people and guide them through that as well.
Yeah, without getting the what is it, chapter 6 or what? Yeah, I didn't.
The Series 7.
Yeah, I had zero plans on doing it.
No, but
I mean, I have people ask me all the time. They're like, don't you want to do your Series 7? I'm like, I don't feel like studying all that much.
Well, you don't need to either.
No, I mean, because all I'm doing is I'm getting certified to do variable policies, which are policies on the stock market.
Right. So, that's what exactly.
Yeah. So I can care less, honestly. I mean, it makes good money, but what I do is pretty good for me also.
And we have said before that a 401k, that is not a retirement plan.
It is, but it isn't, because
it is, but it is. But people think that it is.
Yeah, 20% goes to the government.
You're losing it right off the top.
You lose, exactly.
And so whatever you get,
yeah, and that's why I tell people is you're better off putting your money in life insurance, because the government can't touch it.
And what about the Roth IRA? Is that similar? Only is it tax less?
It's similar, but
it doesn't grow.
It grows. It grows, but what happens is you're going to get taxed cashing out.
Oh, okay. Because I know people who have both. So there's people who have Roth IRAs, 401ks, pensions. Now, when you get a pension, that is from your company, the company you work for, correct?
Correct.
That has nothing to do. Okay. So if you work for a company for 10 years and you have a pension and
which is hard to come by these days.
It is hard to come by. And ideally, you're not supposed to stay with the same company 10 years. They always tell you to switch. Yeah. But if you lose that job, do you lose that pension with it?
I believe so.
Okay.
If that job is paying into it, yes.
If the job is paying into it, okay. But your 401k is something that stays with you wherever you go.
Yeah.
And there's companies obviously that match what you put into it or pay a percentage of what you put into it.
Correct. But for me,
regardless,
I still think all of it is a sham. I mean, your money's going to grow but so much. It's not like, you're putting your money into a stock like Apple through the company and it's going to grow for you. I mean, they do diversify your savings, but anytime the market goes bad, you lose a lot of your gains.
Big time. Okay.
Big time.
So that's why it's not something you
put it in insurance.
Your gold.
Your gold. If the market crashes and you have money in your policy, your money is safe. It stays the same because there's a floor. There's a floor. But if you're one of those people who structure it real risky, then you could lose. I do it where it's even keel for everybody. It's on a steady pace. I put it on the S&P 500. The S&P 500 hasn't had a dip so far that I've seen in years.
No.
and you get anywhere between 6 and 12% of your money in compounded interest.
So you can advise people if someone comes to you, they want life insurance, but they also want to invest into the stock market. You can provide guidance and advice. You just obviously you can't buy the stock.
Right. So like I try to tell people, because being a financial advisor is like certain certifications for it. So I don't say I'm an advisor. Because what I do is I give a disclaimer that
you're a consultant.
Exactly. But I wouldn't say to them that I'm a licensed advisor, because I should say licensed financial advisor, because I'm not certified for it, but I can give my opinion.
Right. And is that something that people like to use you for? Do you feel pretty confident?
Yeah.
If someone asks you, hey, I got $200,000, I'd like to invest in the stock market, and you can obviously offer opinions and research what would be some of the best stocks for them to buy, the companies to invest in.
Well, I wouldn't suggest stock. Like,
right.
Yeah. In my case, I'm like, if you want something that's a vehicle on the stock market, I can offer you this IUL, or I can offer you this fixed index annuity. Because
right.
they will be on the S&P.
Okay.
Their growth is based on the S&P. So I'll pick a good carrier, and I'll illustrate a couple of scenarios. And I mean, I wish somebody would come up to me and say I got $200,000 to put in the market, and I can turn that $200,000, depending on their age, I can turn that into $100 million.
Rather with life insurance, not.
Yeah.
Okay, so I see what you're saying. That's definitely the best way to go. So honestly, people who think that investing in the stock market long term is going to be beneficial, life insurance blows it away.
Life insurance blows it away. I mean, because when you're doing the stock market, you're really speculating that this stock is going to do well. And there's a whole lot of research and things I'm not qualified to explain, so to speak.
Sure.
Now, I do have colleagues who day trade, and they do pretty well with it. But like for the average Joe, I wouldn't suggest it.
Right. No, I get that. I get that totally. So basically, okay. Lori wants to know, basically, you're a one-stop shop. I mean,
try to be.
You do it all. You can do it all for people. They can come meet with you and really sit down and plan their entire financial future, what they want to do.
Pretty much. Yeah, we can do it on Zoom.
Right.
Make an appointment. Yeah,
Okay.
yeah, you can do it on
Okay.
Zoom. That's fine.
So you do everything like that. Okay.
Yeah.
And that's big, and that's important. And you said yourself, you would obviously take on people who would like to join, who would like to be
Mhm.
part of it.
Right.
Okay. All right. Give me 1 second right here. I just have to play this for my guys. We'll be right back. Julius Williams and the Trench Mob. Julius is located in Decatur, Georgia. He trains offensive and defensive linemen. They compete in 5v5 tournaments and college showcase camps all across the country. Proud to say they were undefeated in every tournament they attended. And at every college showcase camp they went to, a member of the Trench Mob was offered a college scholarship. Julius has sent kids to schools like Florida, Florida State, Miami, Clemson, Tennessee, Georgia, Alabama, just to name a few. We have the Trench Mob podcast every Wednesday night at 8:30. Do not miss it. If you want to be trained by the best, if you want to go to a Division I college, Julius has the best success rate. 90% of his kids get scholarships. Go to www.battleofthetrenches.com and sign up. Ned Von Young, fresh himself, runs the Fresh Fold Laundry Company, Chapel Hill, North Carolina. High-end laundry service. You put your laundry in a clear bag. You book online. They come, pick up your laundry, wash, dry, fold it at lightning speed records. They'll have it back to you within 48 hours. You can also schedule a weekly subscription service or bi-weekly, and they now offer a pickup and delivery service, so you never have to leave your house. They have deals for college students as well. So if you're in the area and you're in college, wash your laundry. Go to his website. It's my-freshfold.com. Finally, we have James Whitfield of Luther James Insurance. For the last 3 years, James has dedicated himself to the art of financial services. He specializes in insurance policies, mainly life insurance. He will make you a boatload of money, and he will do so tax-free. He understands the stress that comes with thinking about retirement planning. How much am I going to need? For how many years? Do I have enough? Because fear of the unknown is real. All you have to do is talk to James, go to his website. It is www.lutherjamesinsurance.com. Thank you. How was that? Was that good? There you go.
Good.
Yeah. So people can contact you through your website. They can obviously email you at jwhitfield@lutherjamesinsurance.com. They can DM you on LinkedIn, Instagram, whatever. There's many ways to get in contact with you. And as you said, you offer your one-stop shop for financial services, for life insurance policies, health insurance even, and retirement planning. You can really structure out their entire life and help them plan so they have money. And as Rob always says, retirement is not an age anymore, it's a financial position. So you can position them. If they tell you, I want to retire by 60, you can structure everything if they have the finances and the occupation, obviously, and the medical history. So they have enough to retire by 60. Because he talked about retirement lasts 18 to 20 years now. People are living where they used to live 18 months. So that is big. I mean, you're really planning 20 years for them not to have an income, not to be working. The income is what you're structuring through their policy. Correct?
Correct. And what people don't realize is you have a 401k already. So unless your 401k has like a couple $1,000,000 in it, 9 out of 10 people are going to have a couple of $100,000. That money runs out.
It does. Because you got it's fast. Yeah. People do believe that. They believe that their 401k is going to carry them. And in reality, it's just not going to happen. Not going to happen.
I mean, if you're a certain age, if you're a person of a certain age and you're in your 40s, maybe your early 50s, I can help you stretch out your retirement through life insurance if it's done correctly, depending on what you want to put in there. I can create a lifetime income if it's done right.
Exactly. And that's why you're 38 years old right now. That's why you look so great.
I try. I wish.
All right. Well, great job. Great show. Thanks for answering people's questions and clarifying a lot of information for them. And, this clears up really why you're one of the best options out there. Because you can work with any company, any policy. And what I think is huge is character. You're going to do what's best for your client. You're not about making the sale. You're doing what's best for your client.
Yep.
So again, James Whitfield, Luther James Insurance, www.lutherjamesinsurance.com. Message him, and he will put you in the best position possible. So for James, I am Steve Cully, the best podcast host in the universe. Remember, when life gives you lemons, don't make lemonade. Take 2 oranges, throw them right back at life.